$1.2 million in cash. He's on his way. He's hit the jackpot. He's got a windfall. He's got a problem. He's got a couple other people in the car with him. He tells his friends, he says, the number one thing, the most important thing right now is that we don't tell anybody about the cash. And then he proceeds to go out and tell every single person he sees. He tells his family, he tells his friends, he tells the mob, the mafia, because he wants to launder the money. He tells, one night he's at a bar buying people drinks, and he tells the bartender. He gets drunk, he's going over to his friend's house, he misses the house, walks into somebody else's house, 2 a.m., wakes 2 people up, tells everybody. The radios, the TV, it's fun. For 5 days, it's fun. Everybody's speculating. What would you do if you had $1.2 million in cash? Joey is in trouble because the cops aren't real happy. Purolator wants their money back. The FBI's looking for him. He doesn't know where to turn. He's in a disaster. His dream is now evolved into a nightmare. And 5 days later, they catch him in New York City as he's trying to fly to Mexico. And it's over. And you see, the biggest thing that Joey Coyle didn't realize is that he never grew up and understand that things have to be earned and really to be fully enjoyed. Whether it's success, whether it's achievement, whether it's admiration, it has to be earned. It has to be earned. And at Lawson, for us, success, if you can go to the next slide, bro, has to be earned. And although we like to have it in snapshots of time, and although we'd like to say, you know, what we did in the past was great, success in business is about what you need to earn in the future. Success is about your accomplishments. Even admiration is about what you're doing in the future. We can take great pride in what we've accomplished. We can take great pride in what we've done, whether that's been a family-run organization, whether that was about going public. There's nothing wrong with having great pride in what you've accomplished. But things going forward to fully be enjoyed, accomplishments going forward in business are all about the future, all about what you are trying to accomplish. And for Lawson, that's about growth, whether we like it or not. It's about growth. And growth for us has been the vision. It's about verticalization. It's about operational excellence. And we have a ton of great things going on. But we also have this. You've seen this week? You should have. This means EPS. EPS, earnings per share, a Wall Street term. I imagine most of you are pretty sick of it about right now. Did you see this from your vice presidents? This is what I wanted to go through with you today. We have tons of great things going on. Tons of great things. Wanted this to be a normal, motivational type of meeting. Did you see this? How do you feel? What do you think? Frustrated? Angry? I got the gamut as I go through and talk to people. I have the gamut because of this. Tough week. Tough week. A lot of stuff going on. Hey, Jay, why are we laying off people? I heard you yesterday. It said we had a great quarter. Why are we buying companies? Oh, what's this offshore thing? What's it mean to us? What's it mean to me? I got people everywhere from the gamut of frustration, anger, concern, enthusiasm, motivated, fired up. Yes, there is a ton of people in this organization motivated and fired up. Why? Because they see the things that are going on. That's a gamut. That's a hard message. That's a hard theme for me to try and get across to you. So if I'm you, you're somewhere in this range today. The goal I have for the meeting then is to deal with facts. Facts to offset rumors. Information to offset perception. Information to alleviate concerns. Information so that you can understand what's really going on, not what you're hearing is going on. Information to eliminate fears. And what I'm going to do in this presentation is I'm going to go through how we're doing, but I'm going to intermix it with the questions that you've been asking of me over the last few days and try and answer them. And the meeting will be shorter. Because after the meeting, I'm going to stand right up here and I want to hear your concerns. I'm not going anywhere. I'm going to be right here. Because you have concerns. I can alleviate some of them. Some of the data you're going to see today and some of the information you're going to like. Some you might not like. But my role, my integrity is to tell you what's going on. Tell you the truth. Tell you why. Tell you where we're going. And it's for you to filter it and for you to understand that the focus of the organization hasn't changed. What we're doing is what I've been saying we were going to do for the last 3 years. What we're doing is what we're going to continue to do. And don't blow that out of proportion with just offshore. It's actually, I think, higher than that. It's on fixing bugs. So what we're doing, we're getting out tons of stuff for public sector, for healthcare, getting out functionality. But again, if you look through it, how much of it came from the acquisition side? How much of it came from acquisitions? From the acquisition side, what we do in Massachusetts, they're getting out new code. They do not have the downside of all the 25-year history of product. I know what the issues you're dealing with. I have John Mulcrone, Janelle, Jay, all telling me about them. Brad's in my office. These are real-life issues. I'm not downplaying that. I'm just telling you the facts is, if we're spending 80% of our resources on fixing bugs, we're going to be in trouble because I don't have a roadmap that provides enough new value to customers. That's the dilemma. That's the dilemma we're in. We go to the next one, bro. Which leads to, why are we going offshore? Are we doing it because PeopleSoft's doing it? Are we going to send everybody offshore? Or are we going to just hire Americans? If you got any other hard questions, I haven't received them yet, but I'll certainly get them up there. And I'll answer them down here. The last one I'll get to in a sec. Why are we establishing offshore development? For the last 5 years I've been asked, why haven't we set up offshore development? And I just push back constantly. We're the only large software company who's not offshore. But the issue is we're not doing it because PeopleSoft is. We're doing it because we're trying to become more efficient. What is going offshore is testing, is fixing bugs, is getting all that work associated with the different delivery vehicles we had to do. Net, it's all the work that I heard over and over again we didn't want to do. What's not going offshore is any of the creative side. What's not going offshore is anything associated with design. What's not going offshore is any of the things we need in order to create additional functionality. What's not going offshore is anything associated with architecture. Not going off, like not just not in the next couple of weeks, not period, because it's our lifeblood. Are we doing it because PeopleSoft is doing it? No. But what happens when PeopleSoft has competitive advantage because they're getting their bugs fixed and they're doing the testing and all that at a less expensive cost? What happens when Oracle's able to do 7-day, 24-hour-a-day development? Will they get ahead of us? Potentially. But you got to understand, part of your fear is the understanding or the concern that we're just going to take this organization, this R&D, we're going to take this company and move it offshore, and that's just not true. What we're doing is taking parts over there that is the parts that is not the lifeblood of this organization and getting it done more efficiently. For me personally, that's a hard decision, but at the end of the day, from a business perspective, it's relatively easy. But you got to understand that's not the goal of this organization to move R&D offshore. Never will be, because it's our lifeblood on the other side, on the creative side, on the development side. Do we send GSC offshore? The answer is no. Will we expand offshore? The answer is we already have. UK offshore? Or is it just India that's offshore? We're already expanding. Do we have to do 7 by 24-hour support? You better believe it. Who wants to work here at 3 o'clock in the morning? Anybody speak French? Anybody speak Japanese? Global support will always be here. Extensions to other places are already happening. But it's not like we're going to move your current global support team offshore to India. Not going to happen. Will we expand? Yes, we will expand. Which leads me to the last one. Should we hire Americans? I take offense at that question. How about the people that are on the phones from the UK? How do you think they're going to like that question? We're a global company. We're not a Minnesota company. We're a global company. We're already offshore. We're already in multiple spots. There is a big deal in this question. There's a lot about the United States and its productivity. There's a lot about, what's happening that we follow in the manufacturing industry. I used to be an iron and steel worker in Philadelphia in the 70s. I heard all this. It's like coming back again. There's a lot of facts, there's a lot of myth, there's a lot of emotion, there's a lot of issues associated with this. I'll give you my opinions over here afterwards if you want to ask me. But what you need to understand as the facts is that we're not taking all R&D offshore. We're not taking this organization and moving it offshore. We're taking the work that we can get done more efficiently over there, which is the areas like testing and portal, and that's what's going offshore. I don't know how that's going to alleviate your concerns or your fears, but they're the facts. They're the facts. We go to the next one, bro. Is St. Paul the development area for Lawson? Are we not already offshore? Is Massachusetts develop software for Lawson? Does Florida? Does San Francisco? Do we not have a ton of people in the United Kingdom doing development for us? The answer is yes. Yes. And now we'll have India. Now have India. My issue with you and getting the facts across is it's not about just St. Paul. It's about development. It's about getting more functionality out to our customers. It's about a change. I don't know if you're going to like that message or not. This is what we're doing. This is what we've been saying we're going to do. How we're going to manage this is a good question. But the reality is it's already been taking place over the last few years. And India is part of it. India is part of it. And you should get crystal clear what that means to you if you are in R&D. And if you got questions, you need clarity, get them. Get them. But you're hearing it from me for the 5th time. We're not taking all R&D offshore. And I just have to alleviate that concern as much as I can. And at this point is nothing more than to refocus you that we are already more of a development shop in multiple locations than just here in St. Paul. And that's the people that are on the phones listening to this call. Go ahead, bro. How do we do that? How do we take all these different development locations? How do we do what we're doing here in St. Paul? How do we take all this and bring it together? How do we, if we do additional acquisitions in the future, how are we going to bring them together? These are initiatives that have been funded. CMMI. CMMI is a methodology. For you that aren't familiar with it, it's like a quality methodology. One that you might hear more of is Six Sigma as a big quality methodology. And this is one that we're committed to. This is a process. This is a language. This is the way we're communicating. This is a way of moving the bar on productivity. If you're not familiar with CMMI, I would start to get familiar with it. Now, does that mean CMMI for just development? To start. But I think we'll use CMMI methodology throughout the whole organization. It's a process. So how do we bring all those disparate development environments together? You have to have a process. You have to have one methodology associated with process. Offshore, doing some maintenance development, which is a change, and then Landmark. Landmark is coming out of the lab. Landmark is an opportunity for us to create a completely different development environment that allows those whole things that we were describing on getting design up front right, getting scalability done up front right, getting productivity improvements, is moving out of the lab and starting to move into development. For all those who've been working on it, Richard Patton and his team, it's fantastic. From my perspective, this is one of the futures for Lawson and where we're going. Richard Lawson was here today. He's in my office bouncing off the walls almost every day about this project and how excited he is. So again, if it was just the middle bullet, it'd be a different dialogue. But it's how am I bringing all that together? This isn't things we're discussing. These are things that are being funded, have been in work with the exception of offshore. Here's another question I heard about offshore. How come you didn't tell us? How come we got shocked with it on Monday? I am telling you. We haven't done it yet. We haven't even signed anybody up to do it yet. We don't have a vendor over there getting ready to do offshore. Maybe I'm wrong for telling you. But I'm telling you now. Not waiting for you to find out about it in some newspaper. We haven't picked somebody yet. This is the telling you part. This is it. That's my integrity. Put that message across, whether we like to hear it or not. This is the part. We do not have a vendor site. We will. And again, that's part of, you need, this isn't the end of the communication on this. I'll keep communicating because my goal is just to get that less productive work done over there and get us focused on the value that we can provide to customers. Go ahead, bro. Why are we spending money on acquisitions when we're laying off people? Why shouldn't we just save money and not do layoffs? The first part of the question, I'll answer this in two parts. The first part is really, my cop-out answer is an accounting question. It's understanding balance sheets versus income statements. Balance sheet where we keep our cash, income statements, no matter what we build or buy, impacting the expense side versus revenue. If you need any clarity on that, I'm sure ask anybody, ask your manager, vice president. If they need information, you want some education on this, we will gladly provide it via the accounting department. It is, if you need clarity on it, because it's really an apples and oranges question. It's not about just taking money in cash and paying employees. It's not the way it works. But the real part of the answer is, what are we in business for? Serve customers. What I've been harping on all morning here. Value. Value in terms of what? More functionality, more applications, more code, providing more of a solution to both new customers and prospects and customers. And if we can't get it done internally in time, we got to acquire it. We got to acquire that function. What else do we get when we acquire? Knowledge, industry knowledge, vertical knowledge, marketplace knowledge, technology. Those are all things that get acquired. Only after we realize we can't do them ourselves. And if it's going to take me 24 months to develop some piece of functionality, and I can acquire it as long as I can make the financials work, and that provides value to our customers, and it fits in with our development strategy, we're going to acquire it. Because the real part of the question is back to the value of why we're in business. Providing value to our customers in a time frame that beats PeopleSoft, that beats Oracle. That's the heart of the question. Well, I don't know if it was asked that way, but that's the heart of the answer. And from a perspective, the accounting side we can work on. Acquisitions. Apexion for healthcare. This is ones we have announced this week. Apexion doing the surgical instruments mobily, providing mobile technologies to us. Now, why is that important? Why is that important? Product functionality, value that the customers want. What's the most profitable area of a hospital? Surgery. Whether we like it or not, that's where they make their money. This is the surgical instruments, an extension of the supply chain materials management functionality we currently have. Back to sell to customers. Value they want, you better believe it. You think they're focused on the most profitable part of their company? In times when they're losing money? Yes. What's the other beauty of this? What do you think the number one thing PeopleSoft used to outposition us with in the marketplace? Apexion. Think that's going to happen? I doubt it. I doubt it going forward. Why? Because they're us. Eric, you going to have any relationships with PeopleSoft? David? So it's not like a willy-nilly acquisition strategy. Now, we as a company need to do a better job in ingraining these people, ingraining this technology, getting the knowledge transfer, getting the proof points in the marketplace, selling them, revenue, and so forth. That's all maturity of us as an organization as we continue to expand. But the acquisitions were done for sound, strategic, and tactical reasons. How about closed loop? Closed loop. We're on a phone call yesterday at 3:30. David and his team were getting the closed loop deal done. At 3:30, we're on the phone to announce it with our investor call, and David's not quite done yet. And I'm standing there saying, Dave, Dave Larson, and so I tell Barb, delay the phone call, delay the call. And we're in there, and the lady's coming back, 2 minutes, we got 150 people on the line. I said, 2 more minutes. Dave, are we done yet? At 4 minutes later, David comes in, his team gives a thumbs up, and we close loop. Great job. A lot of effort, 12th hour, part of Lawson folklore at this point, David. Close it, what does it do? Planning, budgeting, forecasting. Planning, budgeting, forecasting. How long have we need that? How long has our customers been screaming at us for this? How many times do we point to Hyperion as a solution? How many times do they say Hyperion is too expensive? How many times did they say Hyperion isn't what we want you to handle this? By the way, in a total message of enterprise performance management, which we're rolling out, how important is planning and budgeting? How does it fit into some of the other acquisitions we've made in terms of smart notifications? They're all coming together. How do we take this and add vertical functionality, vertical knowledge in planning and budgeting? Do you see the expansion of this? The expansion of this. This is what we're talking about. This is the acquisitions. They're not done just because we're looking to add people. They're not done because we just want to acquire companies. It's very hard to acquire companies. There's tons of risk associated with it. They're done because we're providing value to our marketplaces. And ultimately, if we provide value to our customers, license fee will drive up, services will drive up, total revenue will drive up, and opportunities for all of us will be a byproduct of that. That's the nature of the circle. That's the experience. Go ahead, bro. How come executives never get laid off? Don't we have too many executives? And don't they make too much money? This is where I'm going to bring Bob up. The executive part. In the last 3 years, if you've been an executive in my team, and meaning vice president, senior vice president, executive vice president, you've been part of 60% turnover. We have somewhere in the neighborhood of a rolling schedule of say 35, as high as one time 42 people. Today we're down in the 38 range of vice presidents above. 60% have turned over in the last 3 years. None of that, I'm sorry, 2 of that voluntarily. We don't have layoffs, we have the normal purge. Not a good thing. Not a good thing. But it's not a protected group. It is certainly not a protected group. If you are running your career up to that level, by the way, those numbers aren't anything off that much of industry standards. you're moving your career up, you take on additional accountability and risk all along the way. All right? It's not a layoff issue for us, but it is a constant purging issue. It's part of it comes with leadership positions. Don't we have too many? I'm going to tell you, our executive team, and when I say executive team, I'm going to go VP and above. I think there's very few that don't have multiple jobs. There's very few who aren't doing. Joanne Bird does just about everything from product launch right through field enablement, working with LSU. If you look at Cole and what he's doing, handling both IS and the Global Support Center. Dave Percher handling multiple operations. Eric last year was handling Global Support Center and healthcare. I go through the list. You know, Mike Bevilacqua has Treasury Finance. He's doing stuff in the operational end of the business. I can't think of any executive at Lawson who isn't doing more than their job. Do we have too many? I don't know. I just know if I looked at it and had to fill all the boxes for the work that would have to be done, we'd have a lot more of them. And that's the reality. That's facts about it. Do we make too much? Do I make too much? That's a board question. I do not set my income, although I would like to. That's a board question. The board evaluates all the executive team. It's a 6-month process. HR is involved with us. We have a compensation committee. If you're a public company, it has to work this way. It's all out in the open. You can see where we are compared to what. You actually look at compared to what. You negotiate compared to what. We are in line with industry standards. And I'll say this, that every one of my executive team that I pay can find more money somewhere else. And they stay for a reason. I stay for a reason. I stay because we're going to make this thing successful. Because of all of you, because of the opportunity in front of us. Now, if you went back to my steelworker days in Philadelphia, when I was an iron and steel worker, and I look at how much money I make today, I would be astonished. And it's all a perception paradigm question, of one of which you'll never be a good answer. But all I can tell you is that I don't set my income. The comp committee sets my income. And they base it on industry standards. And if you got any questions, call the comp committee. And they'll answer it for you. With that said, I want to bring up and go to the next one. Bob. Right from the beginning of somebody who's the epitome here of doing more than one job, this is our CFO, and this is also the person in charge of most of the operations around here. Just going to give you a little idea how we did from a financial perspective. I'll come up and answer a lot more questions before I'm done for the day. But join Bob Barbieri.
Thanks, Jay. Good morning, and welcome to everyone. Yeah, it's interesting, the multiple roles. Couple things. We were a couple minutes, and actually, I think right at the 3:30 conference call moment. And we're in the room, and we were waiting for Dave Kircher and the team, and no fault of theirs. If anything, they accelerated a pretty difficult process to try to sync it to the call so he wouldn't have to come back a day later. And at one point, the door opens, and we do this in our boardroom that many of you are familiar with, and one of Dave's guys is giving us hand signals on and around the deal. And Jay said, does that mean we did the deal or we didn't do the deal? And I looked at him, I said, I don't know, but I think I'm stealing third base about now.
Thanks, buddy. Nice. Joey Quill.
Yeah.
You know, yesterday we announced, and we beat guidance on the revenue side, and we beat guidance on the EPS side. And we were profitable, and another firm, Manugistics, if you're familiar with them, was announcing at the same time. And Manugistics missed their revenue and lost 11 cents per share. At the end of the day, we went down 50 cents, they went up 50. So we're not managing Wall Street because I don't understand Wall Street on most days. We gave conservative guidance because of the environment. Their CEO gave some rosy picture of guidance, but it really doesn't matter when you don't hit your number. I guess you can just give whatever guidance you want. But that's why you can't just manage your company to Wall Street, because there's variables that happen constantly. Next question. Is the vertical strategy working? The answer to this is yes. As I run through it, you're going to see that over the last, I'm just going to go through some of Q1, but over the last few quarters, you begin to see how this has really transformed the marketplace. I had an interview with some people at PeopleSoft, and who were looking for work, and it was an executive position at PeopleSoft, and I asked them, why do we win? What's your competitive analysis? Just like we have a lot of competitive analysis on them, what was his? And he rattled it off real quick. He goes, number one reason we lose to you, industry knowledge. Without a doubt, he goes, you beat us in the industries consistently. Second reason, price. But that's everybody's reason. We have the same data on that. It's price. And lastly is that you execute better in the field than we do, which is right back to the industry knowledge. Oracle executive interviewing with us, which is sort of telling you what's going on out in California. Said, why do we beat you? Said, same thing. You beat us in industry knowledge. You beat us on your focus on the industry knowledge. And that means product functionality, the people, the service side, sales side, what we say in the marketplace, extended products, and so forth. So again, is it working? Go ask the competition. They think it's working. They think it's working because it's what they can't match up to when you get into a horizontal organization. They just can't move the organization there. So it's working. We're in a tough economy, and the proof points is an ongoing one of the success factors. The Brophy Go. Is it working? The answer is yes. As I go through some more questions, as I provide facts, as I try to give information to offset rumors, to offset any of the perceptions of what might be happening in the marketplace, I got to bring it back to this from a focus point of view. This has not changed. This vision, this direction, the North Star where we're headed, is all the same. Even when I get into the bottom, I get into people, the most important thing associated with our values, integrity, what I'm telling you, what I'm trying to come across, what hopefully you're gathering information, whether you like the information or not, is what we're providing. The way we treat people, the way we're treating all of you, the way we treated anybody that had to leave us in the last week, all with dignity and respect. But this has not changed. Most of the things that you see us do, most of the acquisitions, most of the adjustments, whatever words we want to put on it, whether it's rebalance or whatever the other words associated with describing change, are all focused on this. This shouldn't be a surprise to you. Most of this there's no change of any of the actions we've done have come off of this. And they're not going to. We're going to continue to go down this road and continue to get down the strategies going forward. Is the vertical strategy working? Healthcare is the market dominant leader in their space. We had one big deal last quarter where it was actually a PeopleSoft installation where we sold our products to. We bought the only competitive differentiation product they had against us. Healthcare is just knocking the ball out of the park, and when you talk to the clients, and you can't take it out of proportion for the one I just had this week, they're actually getting value out of our systems. They're getting value out of our systems. This is a market-dominant play. We can grow off of this. We can expand the product set. We can get tons of revenue in this. Why? Because we're adding value to that particular market space. We have competitive differentiation and competitive advantage in this marketplace. We got a great team executing with Eric Morgan and everybody on down through his rank and file that are going to take advantage of this. Huge, huge part of Lawson, will continue to be a huge part of Lawson, and we expect great things from it. Is the vertical strategy working? Retail. Retail had a great, great quarter in Q4. We're off a little bit in Q1. Their pipeline has more than doubled, and it's doubled in merchandising. It's doubled in merchandising. Most of the people that work in the field organization from retail are from retail organizations. The ability to differentiate ourselves, the ability to make change. I mean, even the dialogue of who we compete with here has changed dramatically. It's not so much PeopleSoft as it is our friends across the river at Retech. Former friends, I should say, across the river at Retech. It's JDA. So it's about marketplace, it's about momentum, it's about traction. We have momentum in this space based upon activity, based on where we're going, based on where we're positioned. Jim DeSocio and his team are well positioned for the future to change the way certain things are done. You see some of the acquisitions we've done, the one we did in July, Numbercraft, providing analytic capability for stores. For stores. I mean, this is continuing to fill out the product set for a marketplace that's demanding what? More value. How are they competitively separating themselves? If you go to Target store and they have McDonald's in it, is it working? Does that Target store sell more than other Target stores because McDonald's there? That's what the analytic tool we just bought in July does. It allows them to evaluate. If you were running Target, I think you'd want to know that. Again, it's the value that we're providing in terms of functionality of the products for these marketplaces. It's the focus that allows us to continue to change. Here's the changes we've made. If you went into last year and you see the primary markets, you see healthcare, you see retail, you see SPO. Why public sector? What are we doing with SPO? SPO is a horizontal product in a vertical industry, or vertical industry with a horizontal product. Reality is we will get traction with SPO, and I'll come back to that in a second. Let's start off with why public sector. Why would we elevate public sector? What Sam Adams is going to be doing for us going forward. Bro, if you can move that. The reason we're going to do public sector is because it's a great growth opportunity, because we can provide value to a marketplace that needs it. This is a marketplace that has, right now, has huge upside potential for us, especially when you look at what the opportunity might be. So, besides the IDC reports, which 2.3, I've seen others at 3+ billion in spending on IT for the year. For the year, not future years out. This is like in this year, what they can spend. Look at the base of customers we have to start with. We're not talking about getting into public sector. You have the state of Michigan, state of Arizona, you got Atlanta Public Schools, Denver. You have City of Dallas, City of Providence. So this is a marketplace that we have a foundation of momentum we can drive from. Sam Adams is going to run this division. He's going to take a team and continue to grow it. It's also a division that we do not have to invest huge amounts of money in terms of product, because we've been investing. What you've been creating in 8.1 is going to be used in healthcare, and it's going to be used in public sector. You have position control. You have grant management, you have, the contracting management for the government contractors, all things that are well positioned. So we can get off the ground running in this space without a huge amount of investment. What's that mean? Additional value is already here in our product line that we can provide. We also have the closed loop acquisition, which can help with the budgeting and planning, especially with the uniquenesses associated with this particular space. And service automation functionality can be sold in this space pretty aggressively also. What else? Government is in a huge transition. Why is it in a huge transition? They don't have enough money. So one of the questions I get commonly asked is, why are you going after a marketplace that has less money? I.e., maybe less money to spend. And the issue is, they've been band-aiding their IT solutions together for the last 20 years. It's amazing to go in and see some of these places, except for one fact. It's our money. You should be not amazed, you should be appalled, because it's not efficient, it's not effective, and they can take technology and they have to invest, because there's one of the few areas left they have to invest where they can get a bigger return. Mainframe green screens are very expensive to upkeep. It's the only marketplace where that still exists, I think. It's an unbelievable replacement market, and it's a huge opportunity. And the consolidation that's taken place amongst J.D. Edwards and PeopleSoft, and if Oracle and PeopleSoft and J.D. Edwards get together, well, what happens in an evaluation in public sector? You need at least 3 vendors. You need at least 3. Is J.D. Edwards and PeopleSoft 2? No, that's 1. We're getting dragged into a lot more business just on the consolidation that's happened. Because they need more vendors. That's just one company. If it becomes one big company, we'll be pouring into more business here, because government has to evaluate at least 3 vendors, if not more. And that mergers have actually come to our advantage here. And the pipeline right now for Q2 and beyond is extremely strong. So it's not about trying to get momentum and build it. It's something that we as an organization can grow from right now. right now. So there's huge, huge, huge potentials. Go ahead, bro. Question. Is SPO a failure? Isn't that why we just moved it into emerging market? Pretty cynical type of question. The answer is SPO is not a failure. First off, SPO is made up of a lot of components. It's service automation software. We bought a product because we were going down the road of developing it ourselves. All the data we had said that this was a marketplace that was going to take off. All the data that came from the Gartner groups and the IDCs was talking about a marketplace that was going to take off. We went down the road. We've changed our strategy in this area very dynamically 3 times. We went after service consulting organizations. Then it was government contractors. We even had some misfires before that. We're taking data of a marketplace and on the street learning that certain things were happening. Huge, huge demand for this product. What it happens is, and the ROI is high, but for some reason most organizations figure I'll just, when things get tight, I'll just live with spreadsheets. I'll just live with this. Does it mean that it will ever break through, or in our terminology, cross the chasm? My answer is yes. My answer is yes. I think it will cross the chasm because the need is there. The need to understand what's going on in your service organization. The need to understand what's going on in your IT organization. Those pain points haven't left. It's just where are they going to be prioritized in terms of what you do as an executive, how you spend money, and what you're spending IT on. From my perspective, I do not want to lose any of the momentum we have. We have an extremely strong pipeline in this area. But one of the fundamental questions I have is was Dean Hager able to get this product across the chasm? And my answer is nobody would have got this product across this chasm, including myself. And just like Jim DeSocio, Eric Morgan, Bob, Sam Adams, Joanne Bird, I have more confidence in Dean Hager today than I had 2 years ago. And I had more confidence then than I had 2 years before. And he is the right person to lead this group. Why? There's only one reason Lawson is in that upper hand right quadrant associated with Gardner Group. It's because of the work of a lot of people and what Dean Hager does. And Dean will now lead a group that has not only emerging markets and the SPO division, which will be transformed, but also the financial service division. He has Steve Chamberlain and Jim Millard working for him, Melissa Gray working for him. That group will take this product and move it across and play it out horizontally as well as vertically. And that they'll allow us to do is drive a ton of revenue back into the client base. And will we cross the chasm in this product? The answer is yes. It's a strong product. It's more competitive than anything on the marketplace. And we've got a lot of time, energy, and effort. Now let's focus also on the service divisions. Let's focus on financial services with it. Let's focus on total emerging markets. Let's combine that with the whole EPM story that we can go back to the customers with, which now includes budgeting and planning as well as smart notifications. That home run is what we're going to attack the customer base with. Why? That's value. That's value that customers want. That's value that customers have been asking for. It's a home run. From my perspective, we get rid of all the issues associated with the change. We take on the side of all the strengths, take it and run with this. And I'm very, very confident that that division and that organization, which they're spending time together next week, will be a home run for us as we continue to grow, as we get back to a substantial amount of growth, counting on it, actually, going forward. Growth. More questions. Will there be any more layoffs? Will Lawson be bought? Will we hire people if the economy comes back? Will there be any more layoffs? I hope not. I hope not. I'm as frustrated with that and the impact it has on morale as anybody. But the issue really comes down to where's the organization growing? How's the organization growing? What's the revenue line? I don't want to have any more layoffs because I fully expect the organization to grow. And as we grow, we will be adding people to the last bullet. We'll be adding people to this organization just like we have over the last few quarters. We added 60 people in the last 2 quarters. We added 100 over the last 4. We will add people to this organization as we get back to growth. The only way we'll have more layoffs is if we don't grow. Actually, the only reason we'll have layoffs is if we go backwards, right? Which is nothing that anybody in the room wants. I do not expect it. I wholeheartedly don't want it. But will there be other layoffs? The answer is I hope not, because I see the economy changing. I see the vertical strategy working. I see us positioned well. I see us being able to grow. With all that said, will we be bought? The answer is I am not talking to anybody. I don't know how to spin that any other way. I don't have anything that I want you to read into that. I don't have any other way to tell you outside of, I'm not talking to anybody. Every time I tell people this, you should probably be saying to me, why aren't you talking to somebody? But I'm not. Why? Because the organization is set up for our own financial strength and perpetuity. Will I have dialogue with people in the industry on an ongoing basis? Yes. As CEO, that's part of my responsibility. But I am not talking to anybody about getting bought. I'm not talking about anybody who wants to buy us. It's as clear as I can make it. And there's no spin in that. There's nobody going to save us either. This is about us. It's about us making it happen. It's about getting back to confidence. It's about getting back to growth. It's not about somebody buying and coming and changing the thing out and saving us. I have no dialogue going on with anybody. If you want to ask me a zillion more questions on that, I will answer them. It's all going to come back to that. We're not being bought. What about the future? And I'll just leave it with this, and then I'll be around hopefully for any concerns that you might have going forward. Our position is that we are well positioned to take advantage of growth. We're well positioned as the economy starts to change. We're well positioned if the economy doesn't change, because the growth will come from the additional value, the additional functionality, the additional footprints that we have to give to our customers. They need this functionality in order for them to be able to be efficient, for them to grow. So if the economy remains the same, we will continue to grow by adding this additional functionality that we already have and will continue to develop and we will continue to acquire. So we are well positioned to continue down the vertical strategy we have to actually allow us to grow. We're financially strong. Bob just showed you we have cash, we have no debt. So we're in a great position to take advantage of this. And we'll grow with efficiency as well. Remember, back to my opening story, this is not about being Joey Coyle. This is not about just expecting some windfall. This is not about just having some easy way to do it. We're going to have to earn our way. We're going to have to earn our way through a tough economy. We're going to have to earn our way with tough competition. We're going to have to earn our way the whole way there. But along the way, along the journey, there's success, there's accomplishments, there's admiration. And with that, congratulations, Lawson, for going through a tough period with all your dignity and respect. Thank you very much.